Good evening, everyone. Welcome to closing comments here for February 9th. Let's jump right into our charts and see we kicked off the new week. First up, we got our April live cattle on the board. We did see a pretty quiet day here across the cattle market today. We did see some tight ranges as this market started to stabilize a little bit after that volatility we saw late last week. This April live contract seeing a good, nice, tight inside day sitting right on top of that 20-day moving average. This market still remains in an uptrend, still trading above our 20-day low here at 231.25. As long as the bulls can continue to defend this line, this market is in good shape, and we should see good support anywhere down into the low 230s if we need it. But with this market tightening up inside Friday's range, we should see the bulls try and take this market higher before the week is up. As long as we're trading above that 20-day and our bull pivot here at 237, we should see the momentum favoring the bulls. Look for them to keep this market moving higher. We should see them try and get some bids rolling above today's high as we move into tomorrow's session. Look for the bulls to keep on grinding this market back up here towards these current yearly highs at 244.5. And from there, we should start to target that overhead gap once again. Big picture uptrend still remains intact, and this cattle market looks strong. We should see some more upside continue as we head into the rest of the week. Next up, we got our March feeders on the board. Same story over here today. Prices just hanging steady with some tight ranges. This market did briefly undercut Friday's low, but showed some good support, finishing the day just shy of 368 there. Still seeing good uptrend here in this feeder market as well. Good relative strength here as this market continues just to coast up that 20-day moving average. We still have a lot of support down below, all the way into those 350s if we need it here, but this market doesn't really look like it's gonna. We should see it continue pushing higher here over the next couple days. We still got to fill that gap up here at 375. We were able to chew through a little bit of it last week, but we still need to see this market keep pushing up there and fill that gap. From there, we're not far off from new all-time highs, so we should see this feeder market keep on pushing up there and try and test this all-time high we saw back here in mid-October. Look for the upside to continue here across both feeder and live markets. Next up, our March corn futures on the board. Pretty quiet, tight range day here as well, but this market did open up and pushed down here below our bear pivot at 430. Good rejection late last week up there at that 50-day average and these prior range lows. Bears still remain in control here as long as we're trading below 435. Look for this resistance to hold and the bears to keep driving this market back down here towards the contract lows over the next couple days. Crude oil prices rebounding a little bit here today, however, just staying inside that prior week's range so far. Until we get a meaningful break beyond either one of these edges, we should see this kind of choppy action between 62 and 66.5 continue. Look for this mark to keep on consolidating and bouncing back and forth here level to level as we trade around the mid-60s. We should see this continue, this range-bound action continue to hold over the next couple days. Next up, equity markets falling through with Friday's big rally. We did see a breakdown late last week, but Friday's action snapping right back above our major moving averages on the S&P. The Nasdaq still trading below the 20 and 50-day average. Look for them to see some resistance up here as we're testing these averages from below. The Dow remains to be where the relative strength is at, putting in a new all-time high today, but just a pretty tight range day up towards the top end of Friday's range. We continue to expect good strength here in these Dow sectors. This is a time to be selective with what you own. I would reduce exposure here to these tech sector as we did have a pretty nice bounce between Friday and today's action. And if you're still long after all last week's action, we should start to raise a little bit of cash here as we could see some resistance at those averages from below. Now is the time that you can still be selective and find some good spots in the market to put your money, but as a whole, these indexes are still just going to continue to be pretty choppy until we can see a good supportive action across the board and across each one of these indexes. We aren't really expecting to see any major upside. This market should keep on chopping up in some tight ranges here in the Nasdaq and the S&P, as there has been this divergence between the tech sector and the Dow index. So we expect to see these Dow sectors continue to lead while the tech sector is weighing heavy on this market. Look for this choppy action to continue, and now's the time to just be selective and be aware of the breaking points in these mega cap names. We want to make sure that they continue to hold above that prior week's low. If not, we could see some more downside to come in these indexes. Thank you everyone for tuning in tonight. We'll catch you guys tomorrow.